Hi, it's Tom. Thanks for joining us again for the question and answer video series that we're doing. Got a question about market trends, so that's what we're going to talk about today. As you probably have all noticed, the market's been a wild ride in 2020 so far. Been a lot of challenges, and the market has certainly been reflective of all the volatility we're seeing in the world right now. In terms of trends, we saw the market start out at a high point early in the year in the first quarter. Obviously, the pandemic hit and drove the market down pretty significantly, 20 to 25% off its highs. And we saw a pretty quick rebound after that. Since that rebound, you've seen some trends really emerging, and we're going to talk about those just a little bit. So the first thing that we've seen is that the market, all three of the major indices, the Dow, the S&P, and the NASDAQ, have more or less been in a trading range, particularly the Dow and the S&P 500. NASDAQ has been a little bit of its own creature throughout this entire year so far. When I say trading range, it means that the market went down, obviously, in March and early April. It started to recover, and we've now been sort of bouncing around from day to day within this range. We've seen that both with the S&P and the Dow. NASDAQ has been a little bit more of a straight up trajectory, and the NASDAQ index, of course, for those of you that aren't familiar, is filled primarily with technology companies. Technology companies, some of them anyway, have benefited greatly from sort of the changes that we've seen happen in our world over the last 4 or 5 months. And the companies that have either adapted well or have technology to support some of the new things we've had to do, such as work at home, communicate from home via video. Some of those companies have done very, very well. Home delivery has certainly been huge. So NASDAQ has been on a meteoric rise, and that's probably something that has defined a lot of the mood in the market. We see things going up, we get excited, we want to invest, but as always, we've got to keep an eye of caution open so we are aware of what's going to happen moving forward, or we at least have some idea moving forward of what's going to happen. The Dow, another of the major indices, is filled with 30 companies, and those companies are representative of the industries that they're participating in. Tends to be older companies. The Dow's been more or less steady now for several weeks, and it's remained within that trading range that I referenced earlier. The S&P 500 is a bit in between the two indices, and about 30% of the S&P 500 value is now made up with technology companies, or made up from technology companies. So when tech does well, the S&P sees a bit of a bump as well. I think moving forward, the trends that we need to sort of take a look for, keep an eye open for, is sort of a direction emerging, whether that direction is going to be downward or upward. The market really can't pick a direction right now. Right when we think things are going to start correcting and maybe go backwards just a bit because of a bad jobs report or some information that's come out that's maybe not favorable about progress with the pandemic, we think the market's going to slide back. It might do that for a day or two, and then seemingly it bounces back every time. So it's having a hard time picking a direction. When it starts rising, some bad news comes out and it kind of falls back again into that range. We need to look for a direction to emerge, and frankly, in my opinion, that probably isn't going to happen until we get much, much closer to the election that's coming up in November. Election years tend to be fairly volatile anyway, and 2020 is a year like no other. But I think it's going to be consistent with other years in that we're going to see volatility leading up to the election, and the volatility is related to the fact that the market and Wall Street, they don't like unknowns. And when we have a presidential election, there's a chance that there's going to be a new administration in the White House that will do things differently, and that creates some question marks as to how things will be handled moving forward. And Wall Street doesn't like question marks so much. So I think that you're going to see us probably stay in this trading range for a little while. I don't think that there's going to be enough positive news to drive things greatly upward in the short term. And hopefully, knock on wood, there's not going to be a lot of bad news to drive things downward. So I think what we look for now is for the market to pick a direction, and that will probably start happening as we get closer to the election. Maybe it's late September, early October, that the market starts sort of defining where it's going to go. And summarizing the trends now, technology has been on fire. It's done very, very well. The NASDAQ index has seen a performance that is really, really hard to critique. They've had a fantastic year in the NASDAQ. The S&P's done okay. It's bounced back fairly well. The Dow's lagging behind just a little bit. But I think we'll see more clarity as we get deeper into the year and the election is behind us and we have some better ideas to what we're going to deal with for the next 4 years of our life.